Here on the Transparent FX Academy, every day I share my best market breakdowns, showing you guys how you have to analyze the market both from a technical and in order flow perspective to see where you can be looking for the next potential opportunities in the Forex market. So without further ado, let's go straight to the charts and see which is today's pair. In today's video, I want to speak about USDCHF. Now, why do I want to speak about USDCHF? First of all, we have very interesting price action and structure, and also because this pair at the moment is quite educational to analyze. So I want to give you guys a complete multi-time frame top-down analysis starting from the technical aspect by checking from the higher time frames to the lower time frames, and then we will go and see what we have from in order flow perspective by checking the commitment of traders. So basically what hedge funds and the biggest speculators in the market are doing, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential opportunity on it. Now, starting here from the monthly time frame, what do we have? Now, here in the monthly, we can see that at the moment the market is testing and rejecting quite strong monthly demand and support. In fact, from here the market started all this move to the upside, and at the moment we're testing the exact same demand and support from which there is definitely the possibility to see the market provide a rejection to the upside. So here in the monthly, everything seems quite bullish and we can expect more continuation to the upside. We can also see how we just had a nice impulse and correction, and in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market at the moment is testing and rejecting the zone, which is in between the 0.618 and 0.786 of the Fibonacci taken on this monthly impulse. So here in the monthly, everything seems quite bullish, and we can expect the market to provide more continuation. Going down on the weekly time frame, what do we have? Now here on the weekly time frame, we can see how the market has just provided this M pattern here. Now in general, after the creation of an M pattern, you expect the market to provide a move to the upside to complete the pattern at the previous support turned resistance. So here in the weekly time frame, there is definitely the possibility to see the market provide more continuation to the upside for a completion at this previous support turn resistance. However, we can also notice how in creating this move to the upside, the market is also printing this weekly W formation. And in general, after the creation of a W formation, what you expect is for the market to complete the pattern at the previous resistance turn support before then creating the continuation to the upside, meaning that here in the weekly time frame, what we actually expect before this big M pattern can be completed, we expect the market to go to retest this previous resistance turn support before then creating the rejection to the upside and completing the pattern itself at this previous support turned resistance. So monthly and weekly both indicate for a potential long-term move to the upside. However, we first expect a completion and retest of this previous resistance turn support. So basically we expect a short-term correction before then a longer-term continuation to the upside. Just a quick thing, make sure that you like and subscribe, and also let me know in the comments the topic that you will like in the next video. Going down on the daily time frame, what do we see? Now we can see how the daily time frame actually is showing the exact same thing that we have already identified by checking monthly and weekly. In fact, we can see how the market here on the daily time frame has actually just provided this overextended W formation. Now, generally speaking, after the creation of an overextended W formation, you want to see the market provide a correction to the 0.382 of the Fibonacci taken on the daily impulse, so basically from this low to this high, before then starting the continuation to the upside, which is exactly what we have already seen on lower time frames. So we have a pattern here on the daily, which aligns perfectly with what we have already seen on the monthly and weekly. So also here we expect a short-term correction to the downside before the continuation. it would be great to see the market actually provide a correction back into this zone here. Why? Because this area was acting as very strong supply and resistance here, against supply and resistance here, and since the market has now broken above that zone, all this previous resistance is now turned support at this level. So we can expect the market to go for a retest of this previous resistance turned support before then starting a continuation to the upside. So another thing that we can notice here on the daily is that by taking our Fibonacci from the low to the high, we can see how the 50% of the Fibonacci taken on this daily impulse is actually lining up with this previous resistance turn support, creating a confluence of support, which should be acting as a magnet for the price to go for a retest of this level before then starting the continuation to the upside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing, we can see that lately with the last reports, net positions on the CHF have been increasing. In fact, we went from having minus 4.2k net positions up to positive 1k net positions. So we went from having more shorts than longs to having more longs than shorts from an institutional perspective. But in the long term, the decrease has been very clear. We went from 14k to 1k. So basically from having 23k longs to having 12k longs, and basically shorts increased from 9k to 11k. So overall, we can still expect CHF weakness, meaning that if we do get a correction to this support zone and confluence of support zone, CHF weakness for USDCHF to be strong is very possible for the continuation to the upside. So how we will be approaching this pair with students. Now, if the market will provide a correction to this zone, inside of here, what we will be doing is, as usual, being reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes from a directional perspective combined with the COT data. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, we will be monitoring price action from a 4-hour perspective and lower waiting for the market to shift from an intraday bearish market, as we will have, to an intraday bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point we will be adding USDCHF to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside and for the market to provide and create a higher high. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also click the link in the description that brings you to the mentorship program. It's a very complete program. First, you learn all the rules of my rule-based strategies, and then you trade the strategies with me. Every day, I give you a new daily market breakdown showing you how to apply the strategies with the entry, stops, and take profits. And you can also ask questions and get the answers the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.